Imagine if you could not just hand down a legacy, but a financial empire to your kids and your grandkids. Imagine a painting of you amongst your family over a fireplace in your favorite part of the world, or maybe it's just on a wall if your favorite part of the world isn't cold. And this is your family's getaway, and the story's being told around this painting about grandma or grandpa and your name and just what you did as a catalyst for your family's abundance, for generosity, financial strength, and a creation culture. Today we're unlocking the secrets of a game-changing strategy that transforms ordinary life insurance policies into extraordinary wealth-building machines. Get ready to dive into a world where your money works smarter, grows faster, and provides endless opportunities. And we're going to reveal how infinite banking can empower you to fund your children's education, kickstart their entrepreneurial dreams, or maybe their creative dreams, and secure a worry-free retirement for not only them, but maybe even for yourselves. Curious about how to turn the specially engineered whole life insurance into a savings and investment powerhouse? Stick around, join us as we're going to explore the real life examples, dissect policy designs, and uncover how this innovative approach to financing can build a legacy for wealth generations, or of wealth for generations to come. Buckle up for this transformative journey into the future of family finance, where your money stays in the family and your financial dreams actually are no longer dreams, they become a reality. So why do we want to build kids policies, right? Think about this. What does change equal for you? I want you to put this in the chat, put this down below. When you think of the word change, what's the first word that pops? Just write it down. Change equals blank. Change equals, let's share some words. Growth. Change equals opportunity. Change equals a way to learn something different. And imagine your kid's first home using the cash value in a series of policies, a series of banking policies that you've built, and instead of paying interest back to somebody else's bank, you lend them the money. You're the financer, you're the banker lending your kids the monies, and they're paying you back. And now all of that wealth that would have went to someone else, right, that 70 to 80% that we're paying in interest to a regular conventional bank today, is being paid back into your family's financial pool. And the process keeps, like I said, the principal and the interest in the family. Because why? We're either making interest or giving up an opportunity to earn interest or paying interest. Those are the only three ways that money works. And so when we go through this together today, we're going to really peel back the onion of why build kids policies, why build grandkids policies, and it's not just for banking. It's going to have a multifaceted, multi-pronged approach. So let's look at their early financial education. Who learns quickly? Right? Like, pop in the chat. Like, when we think about kids, think how fast they pick up stuff. You know, if I give my son, if we update the operating system on the iPhone and I hand it to my son Connor, who's 10, he literally can tell me how to do all these things that I don't know how to do. They learn immediately. Think about them learning how to swim or to ride a bike within a day, a few minutes, they're doing the thing. The older we get, the harder things are to learn. So they're sponges. Think how fast that they pick up things. And how do they learn? Let's just go back to the basics of how do our kids learn. They learn from what? From play. Play is the highest form of learning, and they also learn from doing. They learn from falling down. Like, you know, how was breakdancing invented? Well, someone fell down and they want to keep looking cool, so they started popping and moving, and then we have breakdancing. You got to fall down if you want to learn how to dance. You got to fall down and learn how to do the things. So why not give our kids this practical teaching tool and showing them what it looks like to have their own banking system? And what a great message to share among their peers. It fosters responsibility. It shows them, look, we're paying ourselves first. We're putting money into your banking system. And in your banking system, we borrow the money out against that money from the life insurance company, and now we're going to pay ourselves back. It teaches them that responsibility. It involves them in the process. It involves them in your life. No longer is money that weird uncle sitting in the corner. I talk about this all the time. One of the biggest gifts we can give to our kids is to invite money into our homes. To say something like, I love money and money loves me. Money is nothing more than a tool. We remember that money is nothing more than a tool, and we want to look at the practicality of using the infinite banking system to teach our kids. It's practical, it fosters responsibility, and it builds their financial literacy. No longer will we have a financially illiterate culture. And when we look at why would we use this, like many of you might be saying to yourself, well, I'm paying my kid and it goes into an IRA or a 529 plan. And my answer, without going through a comprehensive comparison of each product, we'll call them, or each tool, would be that the infinite banking concept gives you absolute control and choice. And what happens if your kid doesn't go to college and you've been paying into a 529 plan? What happens to that money? Has it really grown exponentially? Has it given you other opportunities to use it for things other than education? And so this is a way that we're going to start harnessing. And when you see this example that I go through, it's going to blow your mind. We start harnessing the eighth wonder of the world. We start harnessing the power of uninterrupted compounding interest. And these small, consistent investments to your family over time, these premium deposits, are going to grow substantially. They're going to provide exponential growth over the long period of time, which as adults, we still have a piece of that, but the kids, the policies in our kids, and change, if we go back to the change question, every time, Nelson Nash believed every time there's a change in your life, a significant change, it called for another policy for the family. New infant, 15 days old, Social Security, policy. Change in career, policy. Change in buying a home, policy. Car, anything that you're doing, you want to keep expanding your banking system as long as your bank system is healthy because you're following the principles. And you have tax advantages. This machine that we're building for your kids' future is growing tax-free. We pay taxes when they're historically low. Taxes are only, well, I don't have a crystal ball, maybe you guys do, but are taxes going to go up or down in the future? What do you all think? Pop it in the chat. Are they going up or down in the future? I'm going with up, or they're going to tax more things. And then we have the third piece here, right? On this long-term wealth building machine for your kids, there's flexible access. There's no jumping through hoops when you need a loan. The money's accessible. You fill out some paperwork, submit it, and no one ever says, well, what do you need this money for? Oh, my kid's going to go backpacking around Europe. Oh, they're going to go on they're going to sail around South America. I don't know. They can use it for whatever they need in their life. And then as well, you're going to have this machine protecting your family for generations to come. Protecting them with a guaranteed estate, the cherry on top that we rarely dive into. But in this example, let's think about this. Kids' policies are easy to design. And when they're designed, they have to take into account the whole family unit. They have to, it's basically an introduction for many families into estate planning, into long-term thinking, into the principles that are the foundation of R. Nelson Nash's infinite banking. And when we think about this question, like if you guys think about this, what would you rather have? Would you rather have, the chart might be hard to see, but would you rather have a penny that doubles every day for 30 days or $1 million right now? I'll hand you $1 million check to go deposit and you can use it right now. No taxes on it, $1 million. Which one do you guys want to have? Put it in the chat, like do you want that $1 million today, right now? Or do you want that penny that doubles every day for 30 days? When we think of this, we look at the chart and we can say, oh, well, Jason, hey, I was winning up until day number 27 with taking the $1 million, investing it, making a spread, moving that money, keeping it in motion. But this penny doubling every day is getting pretty powerful. It's getting pretty powerful. We get 27 days in, we're losing. We get to day 28, now we're ahead $300,000. We get to day 29, now we're ahead $1.7 million in much. We get to day 30, and it's grown by over $4,300,000 more than the $1 million that you could have taken. So that importance of thinking long term, of really thinking through something. And when our kids are young, when they're dependent on us to provide and to protect them, what better way to show them how their money can grow over time? And I'm going to go through a real life example, through a real life illustration of an actual policy that's in force, and show you the growth on the policy and show you what it looks like at different periods during your kid's life. Like, is that exciting to you guys? And think about this, if you're a business owner, I'm kind of throwing out little bits and pieces of different things, different strategies. If you're a business owner in 2024, you can pay your kids up to $14,600 without any income tax ramifications. So where are we putting that $14,600 or a portion of it? How are we putting that into our long-term planning for our kids' future? It might be a collection of a few things, but I'm offering that this is a huge piece that is very much underappreciated and underlooked at for planning in the long term. And when we're looking at the reverse engineering, we have to think that they're always engineered based off the total coverage on either the matriarch or the patriarch of the family. Whoever's the breadwinner, whoever has the most coverage, meaning death benefit, it's going to be reverse engineered, and it's typically up to half of the parents' coverage, up to $1 million. And the premiums, because our kids, whether they're 15 days old, 5 years old, 10 years old, they are going to be a much smaller annual premium deposit than us as adults. Because why? That small premium deposit is going to put a substantial amount of coverage on them, because they're not even in the game. They're not even on the playing field. They're still like at home getting warmed up, maybe doing their aerobics, doing their lifting. They're getting ready to be in the game when we're maybe at halftime in the second quarter, third quarter, fourth quarter. They're not on the field yet. So the amount put in is typically somewhere between $4,000 and $10,000 annually, maximum. Now, with some different estate planning and different wealthy families, you can look at finding ways to put more than that in, but typically it's hard to fit more than that into one of these specially engineered kids policies. So again, another part of this is one of my favorite with parents that have a lot of kids. Anyone here? Show of hands, put how many kids you guys have in the chat. If you're still here, you're listening to this, it's because you're interested in how do you protect your family's future? How do you design this for your kids? And we have 2 boys, and when your boys are dependents, if they're out of the home, they're on their own, they don't count anymore necessarily, but all dependents must have equal coverage. You can't pick a favorite kid. Matt's got 2 girls. I met them. They're amazing. You can't pick one of your daughters and say, hey, this is my favorite one. I would insure them for more. Because the insurance company, if you think about from the other side, from the insurance standpoint, they're going to say, well, why are we putting coverage on this child and not the other one? That doesn't seem right. Is there some kind of foul play here, right? Which is dark, but at the same time, it makes sense from an estate planning. They want to see equal coverage. It ensures fairness and prevents future disputes. And then that prioritizes the premiums for the extended compound interest. And the strategy maximizes the policy value over time, because again, the first principle of infinite banking is what? Think long term. Number 2, don't be afraid to capitalize. So we're just going through Nelson Nash's thoughts on infinite banking and then applying it to specially engineering a kids policy. And think about the applications. Think about the kids' financial journey. First of all, if we knew how expensive it was to have kids, would any of us have kids? It just shows how much love, community, our human experience plays into this. Kids are not logical. That's not a logical conclusion. Having 3 kids, 4 kids, 5 kids, 6 kids, that's not logical. They cost money. They're expensive to feed. They grow, they get bigger, they want more food. So let's roadmap their journey. We're going to look at their early childhood. You know, you're setting them up for flexibility. You can use those for your current life. You can use them for vacations, which I'm going to show you an example of. You can use them for sending your kids to certain schools, right, to private schools. And then as they get older, you know, you're looking forward to more education, to whether they're doing some kind of mentorship program, or they're going to go to college, or they're going to be, you know, a tradesman or tradeswoman, whatever it is. This starts building a resource for your kids' future based on what they're going to do as a creator. And you can also use it when they start getting to that young adulthood. Now they're driving, which is terrifying. If you guys don't have kids that drive, when they first start driving, and you, like, the best thing you could do is spend your money and go hire a driving school. Have someone else come and teach them how to drive. It'll save you about 10 years on your life. Promise. Promise. But we're looking at, you know, the expenses of a car. You know, how do you keep that money in your family and show your kids, again, the financial implications of making major purchases and how that affects your cash flow. And then into adulthood, right? And we're going to go through and roadmap all this out. We're going to show you, you know, the first car, the education, home purchases, business startups, whatever you can dream of that you're going to finance. Those are the things that we're going to talk about. So let's look at a specially engineered policy. Let's look at one where we're putting $10,000 in a year. Left side of the policy is showing you the guaranteed. I don't know if you guys can see this, it's kind of small, but I just kind of highlighted a couple points. So we go 7 years into the policy, contributing $10,000 a year with, you know, we got 60% going towards the cash, towards the paid up additions. And say we've never borrowed against this. We didn't take it out to go on family vacations. We haven't done anything with it. It's just grown over this time. It is a glorified savings. Well, now we get to the point where year 7, at 16 years old, we have $58,000 in change in cash value that we can borrow against to go out and make that first car purchase. Now we would teach our son or our daughter the importance of paying the family bank back, of, you know, getting a job and supporting their car insurance and things, but it gives us a flexibility because we've been prioritizing saving, doing what the wealthiest families have done. Now when they're 18, they're getting ready to start college, you paid yourself back for the car, you have $82,000. Right? You go after college, you have $133,000. Like, some of these mile markers of our kids' life, we can see that there's exponential growth inside the policy. And you can see every year the death benefit goes up too, so that's a continuation of that legacy for future generations. But your cash value is going up exponentially over time. And if we fast forward a little bit further, there's other videos that are out there that I could share, that we have the whole example of going through this in a much more detailed way. But if we look about taking policy loans out, about paying them back, but if we fast forward, I just did this as an example, we go out to where he's my age now, my son's my age, 50 years old, he has $689,000 of cash value, you know, at that point. I did another example, I wrote it down earlier, where the point where he has $430,000 in cash value. I wonder if I can go back a slide. So right here, this bottom one, at age 40, the total contributions into this policy, into the premium deposits, has been roughly 230 grand. Would you guys want your 230 grand to turn into $430,000? And in a place where it is a guaranteed amount of growth, would you feel pretty comfortable with that amount of return and the usage that you'd be able to do? That's 187% cash on cash return. And that just keeps going up exponentially over time, as I was showing at year 50. Or we go to retirement age, fast forward to retirement age, we'll go 65, since I cut off 67, and we can see Now he's at a total cash value of $1.9 million. My wife saw it and said, well, inflation at that point, that probably won't be worth a ton. But think, this is just one policy. You're putting in $4,000 a year, and the policy's growing by nearly $100,000 a year at that point. Like, the growth is exponential. That is that penny example shown in a real life over time. Is that powerful? Do you guys feel the power of just a little bit of long-term thinking, planning ahead, and paying ourselves first? Does that make sense? And so let's look at the family dynamics of this. Remember, we talked about how do kids learn? They learn quickly, right? They learn by doing, they learn by playing. How do you show your son? We used our policy last year to pay for our family ski trip, and that was a way where Connor saw the money come out of the policy. We paid for the ski trip, and then we paid ourselves back, and we paid barely any interest. Like, practically no interest at the end of the year is owed on his policy because the money was out for less than 30 days. And so when we look, we're building a shared financial goals as a family. We're sitting down, we're discussing, we're opening up and talking about money. We're inviting money again into our home. And we have that equal coverage. So now your kids are they feel like mom and dad see them. They're taking care of them the same way. They have the same opportunities. And we all know our kids are not created equally. You know, like Chief Master says, all popcorn pops, we just don't know when they're necessarily going to pop as they're over that fire, right? They're all going to grow at different times. So why not have a system where you can use it for whatever you want with no hoops to jump through when you need the money? You have the infinite growth opportunities, and we're talking about just making premium deposits. I'm not even teaching you the advanced parts of infinite banking because there's so much more that I'm not sharing. I'm just giving you a very high level overview of all these things. And so again, when we're looking during the lifetime, we're talking about all of their major purchase needs. Their cars, their homes, their weddings. And instead of dipping into the savings and going back to the zero, remember the rat race is the equivalent of the zero line, right? So now they're buying their cars outright, they're paying themselves back, they're building that financial responsibility from childhood. And if they want to go to school, if you think that's the right move, it's going to cover their educational expense. No longer are they, unless they're getting a scholarship, which is even better, but it's a significant investment in their future for them to grow, for them to pay themselves back, and it sets them up for success. It shows them the importance of cash flow, how to run a business, how to do all these things. You can tell I'm very passionate about this subject. This is something that's amazing. And so it also gives us as a family to sit down and we do regular reviews. We go over what is our goal for this series of policies with our kids, right? I've helped different fathers, different parents set up 4 or 5 policies on their kids, 2 policies on their kids, reviewing these things. What are we using them for? Are we actually moving the money? Are they glorified savings accounts? And you get that guidance with our mentorship. You know, we're not financial advisors, but we're here to really help you maximize your family's banking potential by showing you how you become a wealth warehouse by building like a Bank of America or a Wells Fargo or a regular conventional bank does. We're building our bank on Main Street, and then 3rd Street, 5th Street, 7th Street. And these 3rd, 5th, 7th Street, these can be your kids' policies. And we can see it growing. And the excitement of the kids' policies is we're putting in way less, and we can see the exponential, uninterrupted compounding interest. Because when I started my policies in my 40s, you know, maybe I'll make it to 100 and see 60 years of compounding. But I don't know. But I'm pretty confident that when we're starting our kids, they're going to see that massive, massive growth over time, which makes us so much more exciting for that piece of this puzzle. And so this is forward thinking, everyone. I'm just offering you a different way to think about how do we prepare our kids for a future? How do we get them to be financially intelligent, financially independent, to not be in the bank of mom and dad so much anymore, to really start understanding how does money flow, how does money work, how does it come back. And this way we're not giving out allowances. We're not saying, hey, you earn this, and they're waiting for a handout. That's not the type of wealth creators that we're looking to create. We want to give that legacy of security, of control. We want to protect our future. And these policies provide that safety net. They provide a way to protect our family from the one guaranteed thing in life, which is what? Change. Change is guaranteed. Things will change. We will have moments where we have unexpected costs. We have unexpected things happen. Right now, we have our dryer not working. We didn't expect that to happen. It's not a big deal, but when you can borrow from yourself and pay yourself back, all of a sudden these little things that kind of are taking away, in a way, or challenging your financial cash flow, when you have that security, when you have that ability to borrow against your money and pay yourself back, pay your family back, it gives you a lot of peace of mind. And you do it together. It's something that we can pass on. So for everyone that's here today, let me know if you have any questions. I want to just highlight the significance of this infinite banking concept and the amount of possibilities. I've briefly touched on our kids' journey. I showed you a real life example. We went through the engineering of it, how it's reverse engineered. I did it quickly, but this will be available for you to watch again. I'm always here to ask questions. If you want to learn more, if you're ready to have the conversation to set your kids up, you know, a couple of you here are already on that journey, just book a call with me. Go to the jason.beyourownbanker.com/30 and jump in a call with me. And if you guys have any questions, I'd love to hear them. Jump in, let me know what you're thinking, what you got out of this, what was the most powerful, what was a takeaway, what's an action item for you today. Any thoughts? Sydney, John, Matt, Felix, I appreciate you all again. I want to tell you guys, you are unique. I want you to celebrate yourself, to think about what you're investing in right now. Just hearing this, just being around this, just learning this concept already puts you in a very, very rarefied air. Most people aren't doing what you're exploring, what you're thinking about. So I appreciate you guys. I can't wait to next week. Every week we're going to have new material, new things to learn. So keep coming. Bring a friend. If this was valuable, my challenge is who can you bring with you to this call? Who can you bring with you to this webinar? Share this with the people you love, with the people that you want to look financially intelligent around. Say, hey, check this out. It's different, but this is what the wealthiest families are doing. So have a blessed day. We're just changing that one thing. Where does our surplus money go first? How do we protect our families? How do we provide for a guaranteed legacy? And let's have some fun on the journey. So be blessed all. Have a great one. Today, we went on a journey. We went and showed you how you can build a guaranteed legacy with your kids and your grandkids' policies. How you can apply long-term thinking to really make the impact that you dream of. How can you be hanging over your family's retreat in that picture, in that painting, in the middle of your family where they're talking about you as the disruptor of financial slavery for your family, as someone who has helped build and create and keep generational wealth. And we do that through specially engineering kids policies, whole life policies for our kids and our grandkids. I walked you through different case examples. I showed you how these are engineered, and we talked about all of the different possibilities that this opens up for your family. So if you've enjoyed this, go ahead and smash the like button, subscribe if you're new, and ring the little bell so that might just turn blue. I appreciate you being here, and we're going to continue our infinite banking journey. I'm looking forward to seeing you in my next video that's right here. So again, keep learning, keep growing, keep asking yourself better questions. Be blessed. Look forward to your questions in the chat below. Please post them because that shows me that you're interactive and I can help you on this journey. Until next time, be blessed. See you in this next video.